What's happening, everybody? It's your boys, Steve Straza, Sean McLaughlin. It's the Flow Show. Happy Monday. Hope everybody had a great weekend. We've got a wild market, and I'm not even going to waste any time, Straza. Straza's all bulled up. Straza, tell me what you're thinking right now.
I mean, Sean, I'm always bulled up, but it's days like last Thursday that just make me really happy because you do all the right things, you follow your process, right? You get into positions, and then sometimes the market really rewards you. You have these monster days. Thursday was a day to sell things, in my opinion. Thursday and Friday. If you're in short-term trades and you're not selling into a day like that, at least something, you're crazy. But this is why, something I learned from you many years ago, we sell the double or have some sort of strategy to take some off while leaving some on. So like Thursday and Friday of last week was a great sell the double or sell whatever. They sell half the position, sell enough to just make back what it cost you originally. And then we don't know. You come into a day like today after, a couple massive up days, depending on where you're looking late last week. And it could either be really good or really bad for some of those positions, right? That soared into the money late last week. And if we have a corrective day, you're going to be down big on some of those positions that you held on to. But if you have a big up day, again, more follow through on the same themes we're seeing or that we saw last week, these positions, if you're in, depending on how short dated or how aggressively your option strategy is, that's where the really, really big winners happen. Do you agree with what I'm saying here? I'm sure you had the same thing happen to you last week.
Absolutely. You and I talked last Friday about Thursday. Thursday is a really interesting day for all the reasons you just said. And I'll add the other thing is that I was very active on Thursday buying puts in the QQQs just as a, personal trading strategy. And I had a killer day being long QQQ puts on Thursday. And I was so focused on that. I was so focused on that intraday that I had no idea that IWM was having the day it was having. When I finally noticed it like late in the afternoon, I was like, wait, I thought my data was wrong. I thought my charts were screwed up. I was like, that can't be right because it felt like it was Armageddon in QQQ that I was trading.
It was one of the biggest daily performance spreads between those two groups, smalls and large cap growth in history.
Right. And we've been talking up until that moment on Thursday, we and everyone in the media had been talking about how, oh, the markets are only going up because the big cap stocks are driving it. And yeah, whatever. But it really became obvious on Thursday when it was really just a handful of the big name stocks that sold off, where everything else was green. But the Qs, at least what I was watching, was down big. I mean, wow, that was an interesting day. I hadn't seen a day like that in a long time.
So we often look back at trend reversals. I'm talking about like absolute price charts. Now, we often look back and say, oh, look, like that was the day where it all began. It's usually a really big momentum or really big breath day, right? Where we look back, oh, look, solar energy stocks were up 10% that one day. That was the bottom, right? You get some sort of like thrust in the opposite direction. We had this on relative terms with the relationship that you're describing, where if you zoom out on something like IWM XLK, you got to go back forever for a bigger day where we saw this rotation into smalls out of large cap tech. Ooh. I think these relative trends are turning. I really do. And you're getting massive follow through today. This is a one-day rate of change. IWM XLK. You can even look on a weekly basis. This is a big reading. So, and look at
this sets up a weird situation, Straza, where, for the last couple of years, we've been having investors, the casual investor wondering, what bull market? Because the indexes are going up, but the stocks that they're in on average weren't going up. Now we might have the flip situation where, the headlines are going to say the S&P is down or the NASDAQ is down or, whatever. But the average investor is going to be like, oh, I got a lot of mid cap stocks that are doing really well.
So it's exactly, I think, where we're headed. So here's what's going to happen. Over the past year and a half now, the headlines have been the market's thin, right? Nothing's holding this market up. It's only 7 stocks. The indexes, the large cap averages have been raging higher, right? But most stocks not doing well. Now you're going to hear the opposite. The indexes are down. All the headlines last week on Thursday was worst day since whatever for the NASDAQ. Worst day since April. Worst day. It was the best day of the market since Q4 of last year. So now you're going to hear them complaining that the averages are down while beneath the surface, things are going to be getting better and more stocks are going to be doing well.
Right. So, all right. With that in mind, Straza, By the way, this is the flow show. And what we do here in the flow show is me and Straza kick around some ideas, some setups that we like, and then we look into the options and see if there's a way to play this, play these ideas with options. So, what's top of mind for you? What are some setups you really like here?
Well, it's exactly what you just said. Do you remember how the Flow Show started? When we really started doing the show, this was about unusual options activity, where Sean and I would come on here with a universe of tickers that saw, a big splash in the options market the week before, and then we would craft strategies and trades following that data. And then we tore it up. We talked one day and we said, you know what? That pigeonholes us to just this small data set. Let's just do whatever we want, right? Because we're not always making trades off that list. And we actually used to do a weekly post that we stopped doing. So now we just get in here and we pick a trade. But it can still be based on unusual options activity.
Sure.
Last week, I alerted everybody in the research chat, there was some crazy unusual activity in these Coinbase 230 calls that expired this Friday. And, they were just making the bet that I think, Bitcoin starts to rally here. That's a failed top. And these crypto equities start doing really well. Just to talk about, how this unusual options data works, especially when it's short dated calls like that, they're up 5x today. So when that hit the wire, they're trading about 3. Today, they're trading around 15, at least before I started the show. Now, I think the move's already happening here. I just wanted to use this as an example where we're tracking this stuff. Maybe we don't talk about it on the show as much as we used to, but there was another situation last week in a biotech name called Viking Therapeutics. And they've been hitting this one up. It's been a, usual suspect on our unusual options activity scan. And I think that right now, I like that unusual options data more than any time in the past where Viking has popped up on our scan because of this. This is the biotech index. I feel like I've been waiting all my life to draw this chart this way. So this thing's finally breaking out. Textbook, right? Everybody sees it. I don't have to explain this. So biotechs are now finally an area where we want to be like consistently fishing and looking for opportunities.
Okay.
Viking Therapeutics. Now, we always want to buy the leaders. Before we look at the absolute chart, here's Viking relative to the IBB. Talk about leadership ever since it came public. Right, this is Viking IBB, just pretty steadily stair-stepping higher up and to the right. Here's Viking on absolute terms. Already marked it up, but I think we should just do it live. So let me strip these markings. First of all, you zoom out on this one, like I said, came public back in 2015. You zoom out, you got a beautiful base here, right? Broke out. You can see the base here. Great. This is one of these GLP-1 potential darlings. Apparently, they have a drug that's even better than Eli Lilly, Novo Nordisk, whatever. I think it's the delivery mechanism. I really don't care. Anyway, when you're a biotech working on a drug, you're either a zero or like a couple $100 stock.
Or a hero. You're a zero or a hero.
Like this industry group, more than any other, it's so binary. It's either going to be great or it's going to be terrible. So any other stock, if this was a software stock even, I would say it's probably trading at 500 times earnings right now. It just went from 2 to 50. I don't want it. But biotechs, this is fine. It's normal. Actually, these are the biotechs we want to be targeting and looking for. So Viking, let's zoom in. We got the base breakout. And then we had this funky thing last year where we had this summer swoon that everybody remembers. And if you just whop it out.
Did you just say whop it out?
Whop it out. Now, whop it
Hashtag
out.
whop it out.
Eastside whop it out. All right. So look, when you get these little hooks, and I'll show you the hook. I know you know. And then a recovery, you want to drop VWAPs like this from pivot highs. And then you see something like this. This was a failed top. And then we got a little scoop and score. This is the hook that I'm talking about. Right? Looked like we were topping out. Nope. Break back above the pivot lows or the breakdown level of this top. Reclaim the VWAP from the range highs with a breakaway gap, mind you, right? And the way we look today, Sean, is just eerily similar to the way that this chart was set up back in Q4, November of last year, right before we got this massive move from 12 to 80. So I would draw this same way. We're right here, potentially scooping back above these pivot lows. You got the VWAP, just, a couple points overhead. And this thing's tight. When you zoom in, it's tight. So the leadership is there. The buzz around the GLP-1 stuff is there. The setup is there. It's very clean and clear. And then the last thing is, this one has just been getting absolutely rained on with unusual call activity. They're hitting
Hmm.
weeklies, they're hitting monthlies, they're going out, every chain, 60 calls, 65 calls. We just keep seeing it. So I thought you see some big open interest typically in the 60s and 65s. I don't know how you would play. I think you want to give it a couple weeks, maybe a couple months. You don't want to go out too far in a name like this because that primo is not going to be cheap, right? It's a big mover. But if this thing
Yeah.
gaps higher, takes out those pivot lows, we're not talking about a move to 60. We're talking about probably back to the range highs. This is a high flyer. Probably talking about 90 something.
Okay. Well, here's the thing with this trade. If you put this trade on now,
Yeah.
then you need to do two things. You need to define your risk because there is earnings coming up in 9 days.
It's not going to matter though.
Right. I'm not saying that's a reason to avoid it. I'm just saying you have to be careful. You have to be mindful that, you kind of said it before that in the lots of times in these names, you're going to be a hero or it's a zero.
Yeah.
And you have to get into this trade knowing that if I'm wrong, I'm probably suffering the full loss. So I'm just throwing that out there as a caveat, as a warning, so to speak. Now, that said, I'm looking at September options, which is not that long, 2 months expiration, but you're betting on this move happening and happening quickly, right?
Yeah, and I don't want to pay a lot for it because, like you said, I plan on losing pretty much everything that I'm paying for this.
Right. So I think with that in mind, I think September 80s, which currently have a 31 delta.
Okay.
You could buy those for about 4.25, give or take.
Why not go down to the 85s and save $100?
It's just longer odds of success, not that that's wrong, but I feel like 80 is kind of like that last level of recent resistance that.
Yeah, you could call that could be a late confirmation zone at those pivot
Yeah.
lines.
Yeah. So I don't know. I think 80s, the September 80s for 4.25-ish feels like a good play,
80.
potentially.
Yeah, absolutely. I mean, when let's look at when the pivot lows were reclaimed this was December 1st. We were trading under $13. Right? We gapped up to $15. And then from there, from December to just late February, we traded up to 90. So that's my cat. We don't know where this thing's going, but probably a lot higher. I think 80 is easily attainable.
Hold on. I think I'm going to sneeze. Nope. No, I'm not. All right. Here's the other thing.
Yeah.
If you don't like paying $4.25 for those September 80 calls, you could cut your cost in half by selling the 100 calls against it, creating a vertical call spread because there's a lot of premium in those 100 strike calls. You're basically cutting the price in half. You're capping your upside, but then you're basically investing about, I don't know, $2-ish for the potential to have the spread worth 20. So $2 for a spread that could be worth 20 if we get a monster move.
And that literally comes down to your personal risk preferences, right? Because you're capping your upside. So just know if you do it that way, you're going to spend less. The initial capital outlay will be, like you said, maybe cut in half. But if the FDA approves their drug tomorrow and the stock pops to 200, you're going to miss out on a lot of upside. I'm not saying you want to plan on that, but like you lose, that's gone now. The absolute lottery ticket's gone.
Right. Is that, forgive my ignorance, is that something that's on the table? Is there the potential of a FDA approval at any moment that's going to send this thing skyward?
Yeah, that's what people are pricing in here.
Okay. Well, knowing that, Straza, then the implied volatility that's being priced in these options is not obnoxious.
Right. It was far more obnoxious, I guess, coming into the year, like February.
Yeah. In February, March, it was as high as it's been all year.
The stock's been quiet. Like, see what the volatility does. The volatility soars when stock's up 100% in a day. Like, what was that candlestick? It was up 120% that day when volatility was.
All right. So here's what I'm thinking. Before we went live, you and I were talking on camera, or before we went live, and you and I were kind of joking, but we're serious that it feels like it's starting to feel like a YOLO market again. And we want to be taking some chances. And this feels like one of those days that maybe we should take that chance, right? Forget the spread and let's just buy the calls. Those September 80 calls. Feels like one of those shots that could be a killer win if we get it right. I mean, the odds of it being that way are, less than 50-50 for sure. But if it could be worth it if we nail it.
Low probability, high reward. I think this stock, this of all biotechs, this one has the most legit buzz around it right now. It's not even close. I mean, you can just see what the stock did off the Q4 lows last year. So
I like it. Let's do it.
To get on. All right.
Let's do it. I'm in.
YOLO.
VKTX September 80 calls. We're buying them for about 4.25, depending on where we could get filled. There's plenty of volume there, plenty of interest in this name in total, so we shouldn't have too hard of a time getting a fair fill. So yeah, let's do that, guys. Hey, look at that. You guys just saw how the sausage is made. That's how we do it here. Straza and I and JC and the team, we have these kind of internal conversations all the time. We just share one with you a week, just so you can see.
It's a new bull market for the bios. Here's what we're doing here. Like, sure, should you go maybe buy some common stock and other safer, higher quality biotech names? Absolutely. These are stocks that we now like. We picked the biggest leader from a relative strength perspective of this cycle, really since, middle of last year. And then we put on a trade that gives us more or less the highest risk reward equation that we can get with that leader. So it's a massive YOLO trade, but if we're right about the biotech thesis and the continued leadership thesis from a name like this, it should be a really big winner.
Yeah. And hey, I just want to address a question in the chat real quick for Curtis, asking me if I respected my stop in a DHI trade we did a while back. Yes, unfortunately I did. Rules are rules, and I'm regretting it now. Straza wanted me to get back in, to his credit. But I said, nope, I'm out. It stopped me out, and that's it. And you know what? This happens. It's not the first time it's happened to me. It won't be the last time, but hey, honoring my rules is what keeps me in this game. I've been in this game for 25 years, and I don't know any other way to stay in the game, by sticking to your rules and sticking to your plan. And my plan was to get out when we broke 140. Hey, congrats on your win, Curtis. I hope you're doing well with that.
Good stuff, Curtis. Listen, in a market like this, you should have plenty of other winners, but the homies are back. The homies are back.
They are back.
Biggest short-term rate of change in the Homebuilders indexes since just coming off the pandemic lows. Last time we were super thrusty back in May, June of 2020. Big move.
Straza, you and I this week, let's get a home builder on the books. I don't have any home builder exposure right now, so we'll talk about that later this week. All right, folks, this has been the Flow Show. We're getting into Viking. We like it. We'll have details out pretty soon. If you follow me on Twitter, I'm Options Sean. I'll have a blog post out with the details of how we do this plan. Hey, thanks for tuning in. We do this every Monday, except Straza, we're not going to do it next Monday.
No. Why?
But maybe we can do it Tuesday. I will be coming back. I'm going on a camping trip later this week, and I will be traveling back from that on Monday. So I will not be here.
It's vacation season for Sean. You work hard, buddy. You deserve it.
Hey, thank you. Thank you. You too. You should take some more time off.
On that note, I was gonna golf today, and this is just such a fast market, and I'm just like covering so many puts, and I'm thinking about like not golfing. Isn't that the wrong way to do things? Right? Shouldn't I just golf anyway?
Just golf in the afternoon. You could do it.
Like
you could do it.
3:30 tee time. I won't.
Yeah, that's all right. That's all right. All right, guys. Thanks for tuning in. We'll catch you maybe later next week, maybe Tuesday. We'll try to fit it in on Tuesday if we can. I would like to, because I get great ideas during this show. So, all right. Take care, buddy. See you, everybody.
Happy Monday.